Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 6 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 4th day of November 2022 and this is the daily report for gold and silver. While the Labor Department's expectation of new jobs actually increased, it was the unemployment rate increasing that startled most market participants. This put pressure on the U.S. dollar. The dollar went down almost 2% and a tremendous rise in gold. Gold basis, the most active December contract, is up $54.80. It's a 3.38% gain. Currently fixed at $1,685.70. As we said, the dollar declined by 1.92% and is currently fixed at 110.64. Lastly, silver shined the brightest today, unquestionably gaining almost 8%, 7.64, with the most active December contract currently fixed at $20.91.5. Considering that gold was trading as high as $1,820 back in the middle of August and methodically moved to lower prices, actually hitting approximately $1,620, not once or twice, but on 3 occasions in the last month since the end of September to now. But what was interesting is the actual numbers of new jobs added in October went up by 261,000, well above estimates by Wall Street Journal. But what really shook the market and changed market sentiment was unemployment, which you can see right here, ticked up from 3.6% to 3.7%. While the fractional uptick was minimal at best, the way it shaped and changed market sentiment was profound, because at least for today, it brought a glimmer of hope that the Federal Reserve will ease off of their highly aggressive monetary policy. The net result was phenomenal gains in silver, very strong gains in gold, and a dramatic sell-off in the dollar. First to gold. Gold gained over $50 in trading today. We can see that expressed on this daily candlestick as a large green line here. It broke above the 78% retracement, which is at 1664. It hit a high today of 1686 and then is currently at 1685, which to me is $5 above the first level of resistance we would have expected to anticipate. You can see that when you see these series of tops that came in over the last week to week and a half right in here. The price difference as to where this green candle ends, which comes in at around 76, and what's being printed as the closing price, 1685, represents the hour and a half after New York closed and Globex remained open. That's when it firmed up to 85. This represents the close in New York. Gold was extremely strong in terms of its upside move. In terms of our current levels of resistance on the upside, now that it is broken above 1680, the 61.8% fib retracement comes in at 1697.20. We're going to round that up to 1700 as our first level of resistance. Should gold continue the move up and turn into a rally on Monday, with major resistance being the 50% retracement, 1720, and the brass ring, so to speak, being this most recent high at 1740. The strong move in gold today was the result of the combination of $1 weakness and 2 market participants bidding gold prices higher. What I find interesting on a technical basis is the fact that we broke below the 50-day moving average, much in the same way we saw gold challenge the 50-day moving average. We can see a series of lower highs, and we have what is basically called a pennant or flag formation. This pattern is also labeled as a bull flag when you have a series of lower highs and lower lows and signifies the potential for a break to the upside. Now, what is interesting about that is we had a tremendously strong move in gold, and it beckons the question, was today's move in gold a one-day wonder, or are we looking at a reversal? This pattern suggests that it could be only a temporary move. This has been Gary Wagner wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.